about, I think, 3 or 4 weeks out of that year. If you go and look at the full year from start to finish, you'll see that BTC has several large weekly candles, okay? And then not much in between. In between, there's a lot of consolidation and chop. So anyway, that is, what's this? All-time high. Crypto total market cap, Bitcoin. The crypto total market cap is right under all-time high, is it? Is it really? Doesn't make sense, does it? Anyway, that was just a side note. Oh yeah, it is. Interesting. Very interesting, yeah. So we're going so much higher than this. If you remember my fully bull propaganda stream from months ago, we talked about potential crypto total market cap targets. And I think to do this right, you want to remove stablecoins from it, because stablecoins have gotten so much bigger, especially Tether. So you want to remove Tether, and you want to remove at least Tether and USDC. And look at it this way. 2.82, so still right up at the previous all-time high. And so the money hasn't really even flowed in yet to altcoins as a whole. It's still predominantly, most of this, like the vast majority of this, is being led by Bitcoin. And then we'll see what happens. I have my own thoughts on altcoins, which will be covered extensively tomorrow, including my picks and the meme coin narrative and all that. But a standard 2 extension from last bull would be 5 trillion, which would be essentially a double from here, or a bit less, which seems all right, yeah. I mean, again, keep it really simple. Confirm breakout, which would be like a weekly close above 3.35 trillion on this, and that is your undeniable all-time high total all-time high breakout confirmed with weekly close. And that doesn't mean, yeah, of course, obviously it means that price can go to here and not stay there and go down and it's all over, or price just has to consolidate, right, and move its way higher a bit more slowly. It's not going to just keep impulsing forever. You can see on all these moves, when you get large impulsive candles, they tend to lead to some consolidation thereafter. What matters next is the consolidation being upwards. I think, and again, we'll see, this all changes, but nothing I see on the data is pointing towards a crash for Bitcoin. And if Bitcoin's not going to crash, then altcoins are not going to crash. And outside of some set kind of external black swan type of thing, the leverage levels seem healthy up here. I mean, insanely healthy for where the market is. It doesn't mean the market can't pull back, but it means that, because everything's just an if-then statement, you say if Bitcoin remains above, right? And so the first thing for me, if we're getting into a bit of lower time frame stuff just before I get into the main part of the stream, Bitcoin creates these higher lows, right, and follows the 4-hour bands. And so as long as it keeps respecting this, then it's fine, okay? So, makes a higher low, makes a higher high. Makes a higher low, needs to make a higher high from here. If it does not, if Bitcoin goes back below 86, that's where you can really look at a deeper correction as potential. If it doesn't hold there and consolidate, then you can see deeper corrections. It does not mean you have to be FOMO long here. Absolutely not. But don't be surprised if the market just continues to grind higher, because at the point where people want corrections or pullbacks, they don't tend to come. It tends to go a little bit further until people stop thinking there can be one, and then it goes, right? So anyway, you know the deal. The best thing to do if you don't have exposure is to wait for at least a short-term leverage flush, right? Altcoins are going to attract leverage. Altcoins are going to have dips into their daily bands. It's not like your last possible chance to get on board is here. Although many of them, if you just look at Pepe, what Pepe did this week, many of these coins are going to do a Pepe type move where they break out and that becomes their new range. Right, so anyway. Blago, Prof. Adam is extremely bearish right now. I'm following my assistants. It concerns me a bit, the divergence between Prof. Adam and Prof. Michael. Yeah, I don't know why he's extremely bearish now. I know why he was bearish earlier in the week or cautious, so I'm assuming it's still about liquidity. And that's, yeah, I mean, I don't disagree. Like, I don't disagree there can be a pullback, but I don't see Bitcoin going back to 75 unless there is some kind of, major new catalyst, which there always can be. I think that more than likely this is just what it is. It's just a valid breakout. And if Bitcoin has gone up too much too fast in the short term through pricing in this Trump trade, then it's more going to need digestion, consolidation. I actually don't think that there's any reason to be super bearish here based on what I trade, which is price action, right? So the idea of, I know what it's based on. It's the pullback. It's about liquidity. It's about all of that. The thing is, the market is going to, if the crypto market's going to be rising, and if people are pricing in liquidity, which I think they are, then it's going to diverge probably even more. But if I'm correct in thinking, Bitcoin was diverging negatively away from liquidity during the summer. I think liquidity conditions were improving, and yet Bitcoin was staying depressed. It was staying lower, right? Yeah, I know, Sir Abe. This is the exact same thing. I know Adam's not super bearish, because if he was, he would have sold his fucking positions. People say this about me too. They're like, I wake up some morning and I say, "Oh, I'm going to scalp Bitcoin short," and people are like, "Michael's maximum bearish." Everybody says, like, there's no basis to it. But anyway, so yeah, I just think that we're at the place where the people's fears are the wrong way around. The fear is that there's going to be a crash. I think that the actual risk is that people are underexposed in assets or in the wrong assets, and that things go higher before they crash. Right? Things go higher before they crash or correct. So I absolutely don't disagree whatsoever about the potential for a major correction or a pullback or whatever you want to call it. However, I think the difference is that I think it could very well be like this, right? And that's your crash. I think there's going to be a major correction at some point. It just does not have to come from lower, certainly as price action trader. I could see a major correction if this breakout fails. If that breakout fails and we start to break structure, yes, that can unwind pretty fast. So I'll be watching very closely the next attempt at these highs, or if it falls back below 90, because we closed the week, we closed Friday above 90, and actually that was our highest ever close on IBIT for a week, right? Highest ever weekly close, and not quite the highest ever daily close. Sorry, the highest ever daily close, right, on a close basis, not including the wick. So yeah, I mean, it could be fake. It could all be fake and psyop, but you don't guess that. It does seem just like a genuinely strong move into Friday close. Okay. Everyone wanting a pullback, people underexposed, causing fuel for the higher. Yeah, Kyle, that's pretty much exactly my subjective opinion is that, yeah. My subjective opinion is that I'm seeing so much talk of pullbacks that it's very clear people are not exposed. Do you think you're the best crypto trader in the world? No, Bulair. Number one, it doesn't matter. You don't need to be the best in the world. And number two, it's objectively impossible to measure that. And number three, it only matters if I'm better than I was last month and last year and the year before that. So every trader can only be better than they were before. So yeah, like again, a lot of this, and this is about tomorrow's second part of the weekend workshop will be much more about the market cycle. But yes, the time for a crash is not when everybody's fearing a crash. Look, the reason why, like Gavron says, the reason why people underexposed cause the market to go up is because everybody wants to be long crypto, right? Everybody tells you that they're in crypto to be bullish. Everybody tells you they're here to make money. Everybody tells you that they're buying Bitcoin or they're buying meme coins. But then something like the summer happens and the summer gets bearish and people sell all their coins because it feels really bad, it looks really bad, and we have another one of these shitty phases. And then it goes up and they're like, I don't trust this. Then it goes up again and they're like, I don't trust this. Then it breaks out and they say, I don't trust this. It's disbelief. And I know it's hard, it's literally hard to believe that's what disbelief is. It's hard to believe that this could keep going up instead of going down because it seems like it's gone up too much. But you have to understand that there are a lot of people that did not have exposure here, okay? They may have bought crypto on the ETF rally, and then throughout the 7 months of chop, they decided to close it or sell or get out or get liquidated or whatever. And then as it slowly grinds up, they don't trust. It's literally, if you're taking subjective, now this is not objective systems, this is subjective. It's the psychology side where you say, that was really bad, this looks bad too, this I don't trust because it's not a clear new high, this I don't trust because it hasn't had a retest, this I don't trust because it's a 70k resistance, this I don't trust because it's a double top at all-time high. So again, you have to understand, when people are saying they want to get back in, they want to have more exposure again, or that they will get back into crypto but they went into cash here, all of these periods throughout this move, I saw it very clearly the whole way. There was not mass bullish sentiment here. In fact, it was waiting for pullbacks for various reasons. It was waiting for tops. It was not trusting moves. And then this move happens. Now, somebody who has not trusted this and not trusted this and not trusted this will actually also not trust this. And so what they will say is, I think there's going to be a pullback now because it's over leveraged. There's too many moon boys. They're chasing into this move. It's gone from 70 to 90 in a week. All of that is based on just speculative, just pure opinion. So the same level of disbelief that causes the move can also cause it to continue until such times as essentially those people who are sidelined have no choice but to either buy or just stay out. Which is why I think at least it's going to try and go higher. Now, if it goes to 94 and fucking everybody capitulates and goes long, then it might drop back. Maybe that already happened on Wednesday and we're just putting in a rounded top or a retest. Everything is on the table. Everything is possible. But this daily market structure, so essentially like an interim low, but this daily low that broke on this closed candle, that would be a bearish trigger. And the very next day, an fully bullish engulfing candle reversed that entire move and closed higher. And closed at an all-time high daily close. So the market is currently showing nothing but strength. It also is in a very fast trend. So if you're a long-term investor, it may not be the best idea to, chase into this. If you're a short-term trader, then you will be following the momentum, which is up. And if you're expecting a pullback, it depends on what your approach is. Because if you're waiting for a pullback and you get the pullback from higher, as long as you're disciplined, if we go up higher and then it does pull back and pulls back 15% into here, and then it comes back into the bands and consolidates, and then you get on board there, that's great. Remember, if you're forecasting a pullback, it might pull back from this exact level, or it might pull back from higher. If your goal is to wait for the next proper correction that resets the market structure, moving averages catch up, brilliant. Be patient. And you will get rewarded. So, anyway. That had nothing to do with today's weekend workshop. So let's get into it. Let's get right into it. Okay. GM, part 1 of a 2-part weekend workshop series on how to make and keep your money in crypto, or and trading, or as a trader. All right. So, number one, you need to think differently. And in crypto, it's actually very easy. The way you make money, the way you win in crypto, is to not behave like all the people who lose. There's a lot of talk about how to be, you hear this number thrown around, right? 90% of people lose money in the markets. Yeah, okay. And so the natural conclusion people come to is, okay, if I want to not lose in the markets, then I have to do what the 10% do. I have to do what the winners do. So I need to study the winners and focus on the winners and take the ideas from the smart money and the whales and all that and understand how they work. Again, that makes sense. That's logical. But it's actually much easier to study the 90%. It's much easier to study the losers and to do the opposite of what they do. So the way to be a winner is to do the opposite to the conventional wisdom. And that requires you to think differently and requires you to keep a long-term view. So number one, you should be buying assets. Most people who are in crypto are trying to get rich quick, and they don't understand or think about long-term compounding. They don't think about, how can I turn my money, my stack, into a much larger stack over a long period of time and actually keep it? They think about, how can I get a pump, quick pump? How do I get 100x? How do I get this? How do I get that? How do I make shitloads of money in a really short space of time? Which essentially is just a gambling lottery winner type of mindset and is not going to lead to any kind of long-term sustainable success. So you might make money really fast, but what goes up must come down. And if things go up a lot, they can come down a lot just as quickly. And people will not understand how to deal with that, because essentially the entire basis of what they're doing is just based on luck. So much of the money that's lost every cycle in crypto is from people who confuse timing and luck for skill. You can be lucky by picking the correct coins, and you can be fortunate with timing, or you can have good timing by understanding market cycles. And essentially, it just means you buy coins in a bear market, and then we get the bull market, and then you're in the right coins, right, the ones that go up the most, and you make a lot of money. There is an element of skill to that, especially if you're somebody who is, sticking around during the bear market and not quitting. But there is also a huge amount of luck, fortune, because when you buy anything, you're relying on other people to do all the work. This is the nature of every single investment or trade. You buy something, you don't keep buying it. Okay, whenever you've bought your full allocation, you're just in. And so if you go long at 60k and then we go to 90k, it's other people who've done all that work in between. It's other participants who've done all the buying and done a lack of selling for the market to rise. It doesn't happen by magic. But you do require other people, other participants to do that work for you. So there's always an element of fortune. There's always an element of what you would call luck or random chance or whatever, which, if you can just accept this, you will become much better as an investor and a trader, rather than trying to assign everything to your level of skill. Because you can have absolutely perfect trading skills, investing skills. You can have well-developed systems. You can have a great approach. You can have the best laid plans of anybody, and the market might still not do exactly what you want it to do. So some of the best trades can lose, and some of the worst trades can win. It's not about whether you're always right or always wrong. It's about how much money do you make when you're right, and how much money do you lose when you're wrong. That's all that matters as both a trader and an investor. So a lot of people like to clown on the sort of Warren Buffett style, which is just buy assets and never sell them and play the super long-term game of compounding, right? Just buy stocks, never sells them. They go up slowly, relatively, but over a 20, 30, 40-year time frame, they compound massively to make him one of the richest men in the world. What you should do is you should take that exact mindset and apply it to yourself without taking his whole approach. You're not going to go off and look for growth stocks and sit in them for value investments, value stocks, and sit in them for 40 years and reinvest the dividends. But you must have a low time preference for the majority of what you do. So, two types. There's a thing called low time preference and high time preference. It just basically is a definition or a reference of how much do you value immediate gratification versus delayed gratification. So, delayed gratification means you're going to take a decision that is probably less impactful for you in the short term, but has a higher payoff in the long term. That's what essentially like buying and holding Bitcoin for 10 years would be like. You know that Bitcoin's not going to 100x in the next 3 months, but you're also betting that over the next 10 years it outperforms everything. So that would be like Warren Buffett or Michael Saylor or any, Bitcoin hodler or these sort of long-term thinkers have a very low time preference. They prioritize long-term benefits, even if in the short term it's uncomfortable, even if they have to sit through bear markets, even if they have to watch as meme coins go 100x while their Bitcoin bags go up 50%. The long-term approach, patience, is going to yield literally always, over a long enough time frame, it's always going to win out. And it wins out for a very simple reason, is that most people will not do it. And so if you're taking the 100% of participants in the market, the 90% who lose have a high time preference. That means they prioritize short-term rewards over long-term gains. You can see this just in the nature of how people are. This is the psychology of the world. Most people who are unsuccessful in life are unsuccessful because they cannot think long-term. They can't plan their career long-term. They can't plan their business long-term. They can't even prioritize their health. If you see somebody who is morbidly obese, out of shape, and they're in their 20s, 30s, 40s, that is somebody who has not got any kind of long-term approach to their own life, to their own body, to their own health. If you see somebody who is constantly jumping from job to job, or somebody who is constantly starting and failing businesses, they probably have a very, very high time preference, which leads to impulsive decisions. If it's in the market, it leads to them over leveraging or trying to chase quick pumps, revenge trading, or spending their money instead of investing their money. Big part two. It's somebody who needs to buy some, let's take something, for example, like a car. If you have 50 grand and you're young and you want to have a really nice car, you might go and spend 20 or 30 grand of that on a car, which is a depreciating asset and provides absolutely no value to you long term, because you could buy a car for 5 grand that is the exact same. It's got 4 wheels and a roof and a fucking engine, and it gets you from A to B. And instead of using the very short-term mindset where you're wanting to get this thing now, to get the gratification, to get the dopamine hit, you're choosing instead to focus on the longer term and to invest that money. This is not the same as being tight or being stingy or being thrifty or whatever. People say is like, oh, you don't want to become a miserable person who never spends money. You want to become somebody who actually thinks about what they're doing when they're spending. Think of everything in terms of the return on investment. You can spend money if it improves your life. You can spend money if it's on experiences that add to your overall experience of this life that we have, this short life we get on Earth. Or you can decide to spend it on bullshit like fucking designer trainers whenever you don't have enough money to be able to afford that, or on this car you don't need, or on some, third holiday for the year that you don't really need, or whatever. And it doesn't mean you penny pinch and save all that money and put it under your mattress. It means you think about, how can I invest this? How can I buy assets? Because there's one thing that's for sure, and that's that all of our purchasing power is getting eroded in fiat. The governments, central banks, they are printing money. So we all know this. They are printing your euros, your pounds, your dollars, your yen, and they are making inflation of the money supply, which is meaning that if you keep your